Hello, everybody. Thanks for joining our webinar on Germany. I think there's one of the sequence in webinars because we, as Quantera Global, are now 10 years in existence. So we're happy, and I think we are very happy also that we can be accompanied by our alliances in Germany. And the first one that called in was Oliver. Oliver Treidler, which we know for almost from the beginning of Quantera Global. So we have a long-lasting relationship, and I think very valuable. Thank you.
Thanks for being here, Theo. Pleasure.
Okay, but you can introduce yourself, I think, in your part. So that's I think the best way forward. Klaus Dorner, I know even longer because he was my colleague since 2007 in the company. Unfortunately, he can't join. That's something that happened today, so that's a pity. But I hope that he can hear it back. And Klaus and will be, I think, by Oliver and by Stefan and Schlaa will be replacing him in his slides. So that's for this webinar not an issue. But it's unfortunately that he can't join. He did a lot on the preparation, but that's life. Oliver and is in it as well. But before we go to your part, Oliver, I think it is good that we go to the next slide.
Sure.
Yeah. And what we are going today, and I think it is Germany is our neighbor country, so the Netherlands, but it is really as a specifics. It is really, you have to understand it where you are going into, because Germany, I always say, has always done a battle between how legal things are and form of melodies and economical way of thinking, and that battle is still going on. And so that's good to see how that development went into Germany and where they are at the moment and going to. Is this that more formalistic legal approach or economic? I think Oliver can talk a long time on it. We all see some legal stuff on court cases and the law in Germany and how that combines, and that's something that Stefan in Schlaa can talk about a lot. And in the end, we will wrap it up and see what's happening. And when you go into Germany, what are the items to prepare for and discussions you could face, and that could be a little bit different than when you go in with a complete OECD angle and have a discussion. So although Germany obeys to it and is going that way, you still need to know that there is some room there and differences that you have to acknowledge, because that's also the basis for the tax authorities in Germany, how they behave and what their room is to maneuver. And when you know it, you can better be a partner for them when you go in. Okay. And then, so that will be a nice one. I already got some questions about that. Maybe next slide. Yeah. Why 3 alliances? Germany is a very big country, and you see where you are. I think like Klaus is in Hamburg. Oliver is more in Berlin,
yes.
Berlin, and Stefan is in Düsseldorf, and that's a really good spread in the country. And also because your 3 have very high qualities and senior professionals, you see that legal and economical thinking is so important how to combine it. That in totality with your 3, I think we have the whole spectrum what you need to know on national tax and TP. Yeah,
that's what we would like to think. Yes,
I know that it is, and I may say it. Okay, maybe then for you, Oliver, would you like to start with the slides on the introduction? What is different in Germany? That would be the next slide. Yeah.
Yes, I mean we just thought it's appropriate to kick us off with a short teaser of issues to look for. We will go into more detail as we move through the presentation.
Yeah.
Those are just some items to maybe look out for. So Germany has a long audit history. So that is quite important to understand, that German financial authorities also kind of have the self-image of being a driver of or shaper of the regulational framework. So we have very advanced and established regulations on business restructuring, for example. Our documentation regulations are quite extensive, as well as special regulations on cost allocations and so forth. German federalism is listed. I mean, yes, as Theo mentioned, Germany is quite big, so tax audits are in the prerogative of the federal states. So it does matter to a certain extent in which state you actually operate. So there are differences between Berlin and Düsseldorf or Hamburg. Field auditors. And how they compare to specialized auditors. Most auditors are field officers, of course. They are, let's say, level of technical sophistication when it comes to transfer pricing is limited. Some are not experts, but what we realize increasingly is that they ask for support from a centralized group of more specialized auditors on the BMF level. Of course, and that's some issues we're going to explore a bit in more detail, how the German legislative framework relates to the EU and the OECD framework, to explain what maybe differences and nuances you should be aware of when you have prepared a, let's say, OECD compliant local file. Does that translate to compliant German documentation? That's one question we want to address. And yes, I mean, ultimately, what is the special situation in Germany? What are kind of the details you want to look out for, like a, let's say, unique view on the arm's length principle, and we will touch upon issues like price setting approach versus outcome testing approach, which might be quite interesting for some of the listeners coming from more outcome tested environment. Okay. So I think that's it. So let's see how those things then carry us through the documentation, right?
Yeah.
Through the presentation. Next slide then. Yes.
Yeah.
I mean, that's an interesting one. That is one Klaus prepared, and as a background, Klaus was my first boss in transfer pricing. So we go back a long way, right? So it's sort of interesting to reflect, and since we're talking about the 10th anniversary of Quantera, I mean, when I looked at the slide, what really kind of jumps off the page is the increasing pace of development, right? So yes, we had initial regulations drafted here, and Klaus highlighted the 1983 administrative guidelines, which were relevant for quite some years in Germany, were referenced a lot when you write statements or arguments to auditors. And for me, I mean, I really kind of got socialized in transfer pricing in 2005, maybe 2004, 2005, and 1983 seemed like stone ages to me. But by 2005, I think Germany kind of really evolved and put much more focus on having a comprehensive transfer pricing framework. So the 2005 guidelines are comprehensive and contain quite detailed regulations that determined how to approach transfer pricing in Germany, and they were mostly in line, but not completely with the 95 version of the OECD guidelines, I dare say. And then, of course, we all know what happened in 2010 and 2013. BEPS happened, right? And then just the pace increased much more. And I think Germany is not necessarily unique in that development, but certainly is also one country who was very quick to implement the BEPS provisions and also adheres to the BEPS provision. And two elements that I want to talk about later in more details is, of course, the present, because the past is interesting, but we live in the present. So we want to talk about the 2020 administrative guidance and the 2021 administrative guidance on transfer pricing. So that's the status quo, and to kind of give a sneak preview. I mean, we are much more entering a stage where we are more aligned with the OECD guidelines. So I think that's positive in this development. But as you can see from the plethora of decrees listed, things are not necessarily getting less complex. And the future, I mean, who knows? There's certainly ample scope to talk about Pillar 1 or 2, and also the BFIT from the European listeners. Germany certainly, like the German Ministry of Finance, is very keen on that. They are not like conceptually fans of the arm's length principle per se, let's say. So they are very likely to, if those initiatives gain momentum in Europe, they would support it. But I think that's maybe a subject for a webinar in 2024, Theo. And then I think that's a historic overview. Maybe something to just take away is really that we have a very dynamic development. So
may I have a question here on the formalistic? You see in Germany when you have discussions, next to then when you have a map case or APA, 13 people comes around. So from the table of the German tax authorities to speak to you on local, state level and central level.
Yes.
And then also a coordination group as well. Next to it, there was a lot of reference to a book of law and regulations.
Yes.
Means that in the regulations there's a lot of descriptions. The book is far thicker than, for instance, in the Netherlands. I know the book. Could you say that in Germany the tax authorities have less room to maneuver with because there is so much already in the regulations and the regs? Or is that?
I mean, that's my personal take. Like in our day-to-day audits, I would always think they have sufficient room to maneuver if they want to, if that makes sense, right? So it's not that the discretion of the field tax auditor would be too limited to come to a good conclusion or to kind of come to an agreement on. But let's say the more formal nature of things sometimes causes additional frictions and discussions that for tactical reasons might be exploited to kind of drag on proceedings and escalate them. If that statement makes sense.
I understand, because when they ask senior TP specialists to the table, and then there is more possible. That's what is my that's what I see in Okay.
Yes, and the local field auditors usually stay at the table. It's not speeding up things, so it's not always easy. If you know that you're not only negotiating or discussing with one person in charge, but there are multiple people at the table. Like you mentioned, I mean, 13 is extreme, but still, the more people are at the table, the more. I mean, it doesn't get less complicated. That's for sure.
Okay, well, maybe then the next slide, if you agree. Yeah. Okay.
Yeah. I mean, that is again an overview of how the legal landscape kind of shapes up and the hierarchy of things. At the highest level, certainly the law embedded in all the double taxation treaties. I think the one aspect, and that was the reason why Klaus actually crafted this slide, is in the middle, right? The decree box here is the one that is a bit unique about Germany, because if you want to challenge anything as a taxpayer relating to the decree, you have to go, as I'm informed, to constitutional court, and it just doesn't happen that those decrees are really challenged. So that was, and I'm again only a listener in those legal. I'm the economist, right? So I'm more of a spectator in those legal areas, but that was apparently a conscious decision by the lawmakers, just to increase the threshold and make it make it harder for taxpayers to appeal these decrees, right? But for practical purposes, and again, then I come to the box on the bottom, this administrative guidance that I already talked about, and that will we review in a bit more detail. That is really what drives day-to-day transfer pricing, right? And also the administrative guidance and the principles of TP, they have an annex, and the annex of that is the OECD guidelines as you know them. So that is basically the field audit is the OECD guidelines, which shows the alignment, plus a little bit of German, let's say, framework on top of it. But that's that's for practical purposes in my view the most relevant literature that you will need day to day.
And you have to understand it because I think this is really also not. There are more countries that are so formal the laws and decrees on TTP, but in Germany there's really the outcome of how Germany then behaves in this kind of situations. You really have to more look at the formalities far more than probably in the Netherlands, because the tax authorities are binded by them almost. Okay.
Yes, that's good. I mean, the binding nature here actually for tax authorities goes down all the way to the administrative guidance. So if you want to reference something that's in the administrative guidance for you as a taxpayer, it's not necessarily binding, but it's essentially an orientation for you. But for the tax auditor, what is written in the administrative guidance is binding. So and that happens in practice, if an auditor kind of gets too creative, let's say, in his interpretation of things, you can actually, in your defense, reference this administrative guidance provisions to kind of keep him on track here, and that's why they are really relevant.
Thank you. Okay, thank you.
I mean, yes, this is probably also not a German. Not a unique German way of thinking about transfer pricing. That's always, and we should just mention it briefly, that of course transfer pricing is at the interface to various other subjects. One that is, I mean, it may be a bit hard to see on the slide is the customs duties. So yes, that's an issue when you talk about year-end adjustments and target margin systems. Then yes, you will encounter custom issues in Germany. That of course applies for other countries as well. Another thing is the management implications. So that is relevant, and I'm going to come back to this in a bit. So the discussion of, are you talking about transfer pricing from a mere tax and outcome testing perspective? So are you talking about your TNM benchmark kind of results? Or are you talking about actually price calculations from controlling, right? So are you really talking about all the budgets and project calculations and how those issues interact? That's in Germany actually quite a important interface, and one where you need to be aware that a German tax auditor will not only confine his analysis to your TNM benchmark, but he might very well inquire into this price setting management books kind of scenario, and you're obliged, again, based on the laws we have seen, to actually provide that information. So if you have in your price setting price calculations and they are requested in an audit, they are not a compulsory part of your documentation, but they can be requested in an audit, you have to present them.
Yeah, and in theory, I understand it, Oliver, because price setting is the arm's length setting.
Yes.
And outcome testing is the testing of what you did. So if you do something on the prices during the year, then you should document why it is arm's length that you change it. So in theory, I understand, but in most countries, outcome testing when you're in the range is okay. But in Germany, then you can have difficulties. And understand the customs remark, and not take too long, because that's not only in Germany. And I was a co-writer on customs, and then price setting is for customs far more important than you think, because outcome testing and customs doesn't go very well together. That's I think what if you have a summary, but okay, we can.
No, that's true, especially if you are not having a solid contractual basis for your pricing adjustments at year end and so on, and then the trouble really begins. Yes,
that's true. Okay, yeah, I mean. Yep.
Yes. So I mean that's again more or less a wrap up of what is the historic background, what to look out for in Germany. Some of this were already mentioned here. So yes, we have complex rules. They are significant and binding for tax authorities, and you should take TP seriously. So not just the outcome testing, but the entire process. One can differentiate between binding and non-binding regulations. You need to understand a little bit the audit culture, which I mean, let's see how much time we have in the end. We can maybe mention some examples on this. But in Germany also, I mean, just as a general remark, it does matter which which auditor is assigned to your case. They're all different. I mean, we are all people. They have different preferences and so on. So actually, it's sometimes surprising because we always talk about regulations and how to interpret them, but it really plays a significant role which auditor you actually are assigned to, and so it's a bit of a lottery sometimes. The general development, I mean, I could talk for hours about this. The bullets mentioned by Klaus, I would subscribe to 100%. There is, let's say, a climate of distrust. I don't think I'm exaggerating when I'm making this statement. So in a German audit, often there is kind of the preposition that the companies might have tweaked the transfer prices and we are not very trustful, and that is not necessarily beneficial because that might trigger all sorts of supplementary requests for things I just mentioned, like your pricing calculations, to that they really have the tendency to not just stay on the surface, but kind of put you to the test, let's say, which is not very favorable for the duration of the audit. Necessarily doesn't necessarily mean the outcome will be bad, but the duration of the audit might be prolonged. Plus, I mean, we will talk about the administrative principles that are current now, but to understand why they are phrased and contain certain provisions, it is really important to understand that the German authorities have this public discussions or reacted to this public discussion by really enhancing transparency requirements. I mean, if you want to break it down, what's unique in Germany, it's really your obligation to ensure very high transparency. To give you one example before we move on, and then I don't have to give it to you later. What do I mean by this? Think about your contract manufacturing agreement, right? You have a contract manufacturer, undisputed, classified is correctly, he gets 5% remuneration. You may or may not have a benchmark to substantiate it. It seems to be all good, but maybe you're not 100% clear on the cost base you have applied. Is it full cost? Is it partial costs? Is the P&L of the contract manufacturer segmented? In Germany, in the administrative guidance, because we are coming from this angle here, you can no longer say, okay, it's a contract manufacturer based in Poland or the Netherlands, wherever. I cannot get more detailed information about the cost base. I don't have a composition of the cost base or of the budgets. The German authorities might challenge the entire setup. Why? Because it's even written in the administrative principles that they are saying, well, at arm's length, third parties would insist, if they have a contract manufacturing agreement, that the cost base is specified in the agreement. I mean, fair enough, but I mean, the effect for you is you cannot kind of disclaim yourself. I don't have access to the cost calculation. That's again why are the cost calculations important? Because they are part of transparency, and the German auditor will insist that you provide them. And if you cannot or do not provide them, you will not be given the benefit of the doubt in those cases. And that must be clear. Okay.
And maybe last comment, what I understood that like in the Netherlands, there's really a binding advice from the top below. If in Germany, the local auditor has the possibility to not agree, and then there's no agreement with.
Yes. And to be clear, I mean, because it might be a question is it beneficial to have a field auditor who's not that experienced or not? And I mean, it's hard to generalize on this, but overall, I would think it's not necessarily advantageous to have a field auditor who is not very, let's say, experienced in transfer pricing matters, because they will be much more reluctant to listen to your more outcome testing, economic analysis, and stick more closely to their checklist of formalistic issues and try to cross them off. And if your agreement is not in order, I mean, yes, you might think substance over form must win in the end of the day, but with such an auditor who is kind of, because he feels not so secure about the economic discussions, he might stick to the more formal issues, and that actually I find to be a disadvantage, let's say. I could mention other words, but let's stick with disadvantage.
I have a couple of stories to tell that will alarm you. So it is good that it's better to have an experienced auditor and the other one treat them well in the sense that you answer the questions in detail. Otherwise, he will be very formalistic, and that could take years to get an audit for really done. And that's what I'm seeing. So it is really more important than, for instance, in the Netherlands. You have to treat everybody with respect, but I think in Germany it's very important that you answer in details and on time, far more than somewhere else. Okay. Next slide. Yeah.
Yes, I mean, this is essentially a compilation and summary of what we have here in terms of also court rulings. And I have to apologize that I'm not the expert on the court findings itself, but the court findings, of course, are complementary to what we just discussed. So they are kind of the framework, or the larger framework of what we see in the day-to-day audits, as well as in the administrative principle we have. I mean, the cases, there were some landmark cases here. One of the core insights that regarding the latest court findings, or the developments in the court findings, that Mr. Schlaa here wanted also to emphasize, is that the German courts are also, like the appeal courts here and our fiscal courts, are also emphasizing more heavily the economic side of things. So they have handed down judgments to say, okay, we will not accept audit challenges just based on those formalistic issues, but increasingly they said, no, you have to apply a consistent economic rationale. That is, I think, more what the OECD world is comfortable with, is experienced with. So that this is certainly something to be emphasized here. Maybe the last bullet point I'm seeing here is also deserves a comment, because that is kind of unique in Germany. We have this hypothetical arm's length test. Also, it's quite relevant in discussions sometimes, because it is sort of the, let's say, I would dare say it is sort of a method of last resort in an audit. So if you cannot agree on any method for whatever reason, then often reference is made either by the taxpayer or by the auditor, might cut both ways, to say, look, we have to do an hypothetical arm's length test here, and the way it works is essentially to assume a negotiation between the parties, and how such a negotiation would end up. So you are essentially talking bargaining theory at that point, which I personally I don't mind much, because bargaining theory is flexible.
Yeah,
it will in most cases facilitate a compromise. On the negative side, if a hypothetical arm's length test is applied and you come from a TP setup that features a tested party, yes, you're more likely than not facing a substantial TP adjustment. But I mean, that's something to be aware of, that German auditors could point to such an hypothetical arm's length test, which is not as established, as I understand, in all jurisdictions.
May I, Oliver? I think I got the question. I'll just put it on by. To be honest, I have had for 1 year a big debate and a course on bargaining theory, so to understand it. And you see that it's remarkably close to arm's length principle, but it has not a theoretical background which we have as TP specialists.
Yes.
So it is in the end, if you do it well, then it would come to the same outcome for a range or what the method, but it wouldn't be something that we could then back up with searches or whatsoever.
It's very subjective. It's very subjective.
But really, if you go into the bargaining theory, and not Germany specific, but there's really a lot into it. Okay.
Yeah.
Then
what is a bit unique? I mean, one addition, because that's really unique. If you, I mean, again, we are not dwelling on individual regulations, but we have the provision on what we call Funktionsverlagerung, so the exit tax provision. And actually, the annex of that provision contains a very detailed example of how you would conduct such an hypothetical arm's length test, right? So how do you kind of assume the calculation ranges and so on and so forth. So yes, if you're doing transfer pricing in Germany, that's just something to maybe keep in the back of your mind that it exists.
Because there's some strange conclusions about the synergies and how to share it and who is getting the benefit. But okay, that's for another time, for another moment.
Yeah, that's more technical. But
there was a question about documentation requirements. Germany has some specific documentation requirements in the law. When you need master local file or documentation.
Yes.
Could maybe not. Let's take the time now. I think otherwise the question could be in the end. Is it something you can talk about at the top of your head? Yeah?
Sure. I mean, again, we also have this decree law. It's called the. And I mean, some might be familiar with German. I know you are, Theo. So it's a nice German word, very short. It's the Gewinnabgrenzungsaufzeichnungsverordnung, right? So if you are on Jeopardy or whatever it's called, or I think the spin the wheel of fortune or so, then that's a nice word. It determines. I mean, it's a legal basis that you have to provide it, and I think that's of interest. When do I have to go through the trouble of presenting this? I think the master file threshold actually was under discussions, and I have to admit I'm not 100% sure if it's still 100 or I think it's even lower to 50 million by now. But that's the master file for you, and I don't consider the master file to be that spectacular because essentially, if you have a master file from wherever, you use it in Germany, and that's the end of the story. The local file is, I think, what is more relevant. So you have a subsidiary in Germany, or you're based in Germany. When do you have and have cross-border transactions? There are thresholds. So it's 6 million per year when you have goods crossing the border, and that's inbound plus outbound, right? So just not one direction, two directions. And for services, it's 600,000. So if you are above these thresholds, then you have to, according to this decree law, prepare full scope transfer pricing documentation. And the local file, again, if you have an OECD compliant local file from a formalistic point, you're okay. I'm going to address some of the nuances a bit later, but essentially that's the way to understand it. What's also, however, important is to not be complacent if you're below the threshold. Two reasons. Auditors will not check the threshold, right? They will issue a letter to you and say, okay, look, we come to audit you. Please provide us with the transfer pricing documentation according to the decree law. So if you are feeling you're below the threshold, well, you have to prove it. The auditor doesn't check it for you, so you would have to sort of prove it. And even if you do, so if you're telling the auditor, look, we don't think we need to document this here because we're under the threshold, it doesn't, even if you're right, it doesn't mean you are home free, because the auditor might say, yeah, okay, that's all fair and good. Then next question is, please explain how you complied with the arm's length principle, and maybe he poses you a list of 20 questions. When you have answered the 20 questions, well, the result is you have written a local file. So, I mean, it is a bit, a catch-22 situation if you're familiar with the phrase, right? So it doesn't really matter.
So the answer is you need to have it, yeah.
Yes, you're well advised to have it. Yes, and
also rather that it should also be combined. So it is not per legal entity; it is in totality. Yeah. Okay.
Yes.
As well.
So if you have multiple entities, there are provisions in the decree law. You have to be very careful and check whether or not you have to aggregate the transaction volumes of your legal entities in Germany. Chances are that you have, and then it is very unlikely that you are really under the thresholds persistently. So once you crossed it, I think that's it. You will be audited, and even if you're below it, again, you will still face questions, and you have to answer them. I mean, it's in Germany also. You have the extensive requirement to comply. Again, coming from this mindset of enhancing transparency. So there's no wiggle room for you to say, well, I cannot procure the necessary information. I don't know, the colleague from last year is no longer with the company. Nobody knows what was going on. Yeah, that's tough luck. That's not nothing the auditor will accept.
And other sides, you are audited each year should be audited. That's a strange thing in Germany. Yeah?
Each year, I mean, theoretically yes, but there's a statute of limitations. So they might actually, if you're very small, they might skip a year or so, or it might happen because they just forget or overworked. So for smaller companies, it might happen that a year might lapse. It happens. It's rare, but it happens.
Okay, then maybe sorry, again a question coming in. You said unilateral APAs is on the slide, but is there a possibility for unilateral APAs? Because that's a question that comes in looking at this slide.
Yeah, in Germany there are, I mean, unilateral APAs are more formalistic approach. As far as I understand, the German Ministry of Finance doesn't look too favorable on unilateral APAs. They would favor multilateral APAs, and we have other instruments called, I mean, it's more like a informal understanding with the auditor or with the Ministry of Finance. It's called a verbindliche Auskunft, meaning like a qualified opinion, and there you can, I mean, address the Ministry of Finance, say, okay, this is my transfer pricing structure. Am I generally speaking okay or not? But yeah, I mean, those are on the rise. I mean, people are interested in this because uncertainty is growing, or risk is growing in generally, but MAPs, I would still maintain, Theo, and you know this, that Germany is lagging way behind Dutch or others in having those structures in place.
Yeah, and it's difficult to get by. That's what I did a couple, and it is really sometimes a journey to get through to it and to find a conclusion and avoid double taxation. But in the end, every time we succeeded, but it is a little bit more difficult because, like I said, your federal levels and local level also has to be agreeing to it on local level. And when you have not the right field auditor, then you are a little bit in problems. Yeah, that's true. Okay, then maybe next slide.
Yeah, let's see. I mean, most of this I think is, I mean, yeah, probably much of this has been addressed. I would just re-emphasize the last bullet. Yes, transparency is key for sure. That's certainly what is happening. Yes, I mean, then I think most of the other stuff we talked about, I'll just address in the wrap up. So I would think we advanced.
Okay.
Again, to the next slide. Then
you have to advance, Oliver. I just it's always the same thing. Like Klaus couldn't attend, and he did a lot of the pre-work on it. So really, and I just got a message that in Germany there's a problem with the internet. So I think we have to do it together.
Yeah, that's good. We will do it together.
Schlaa, and Stefan did a little on this part. So, but we can do it together. I think okay. Yeah. This is sometimes it happens.
Yeah.
Okay.
I mean, this is also a valid question. What about OECD guidelines? Are they binding or not? More legal discussion, as written here by Stefan. It is actually was discussed in Germany. They are saying the guidance are not applicable for unaudited cases before 2017. The practical implications are, I don't know, probably limited to very few clients. One would have to see what happens. But for 2017 onwards, and again, we're living in the present, then the guidelines are applicable when interpreting the ALP. And I would dare say that the difference is more relevant for some edge cases. Maybe I could think about some DEMPI related cases. I think that's the most relevant aspect here. Is DEMPI concept applicable, yes or no? That actually might be falling in this field, and I personally have actually experienced one audit where this was on the table and discussed fiercely, because that obviously makes a difference, just because DEMPI is such an important concept, right? But that's, yeah, I think that's maybe for the legal, how to interpret whether or not the impact of OECD guidelines being legally binding. That's the most important one I can think of.
Yeah, that's a good example of differences between countries. In the Netherlands, they see DEMPI as a new abbreviation of a concept that already was in the 95 guidelines. But in Germany, they say it was now formal in the new guidelines, so it is applicable from now onwards. And the Netherlands, we say it is a way of economic thinking that is more structured now in the guidelines. So there's really a different way of looking into, and that could lead to a big discussion between countries. But my experience that on higher level, on APAs and MAPs, those people together, they step over that hurdle and come to the economical thinking. But on local level, you get that problem. So that you come back to what you said 2 times already. Yeah. So local level is important and more important in Germany than in other countries. Okay. Yeah.
Well, then let's see. Lessons learned. I mean, generally speaking, I mean the lesson here that we see DEMPE also listed, so we were definitely on the right track here. Lessons learned: OECD guidelines are more favorable. Like if they are more favorable to the taxpayer, then you should rely on them. Of course you should. If not, you should challenge the applications. That is again probably more for legal cases. And I will, when I discuss the administrative principles in a second, I will highlight maybe 2 or 3 issues where this is relevant. So yes, there are some issues where I think OECD guidelines are more favorable or more flexible, let's say, and some where I think that's primarily I see this case to be dominant. But yeah, I'll give you examples as we move along.
Yeah, next slide. Yeah.
Right, and here we are with the most recent developments or current situation. So again, we had, and that's, I mean, not to be underestimated, right? You saw the historic background. So in 2020 and 21, we had new administrative principles. What is just called administrative principles is more for the procedural stuff, right? So this informs you how an audit is conducted, how you have to behave, let's say, during an audit, what is expected of you to provide, and how does the burden of proof shake out, and so on and so forth. So those are the administrative principles that kind of set the general framework. Those were issued in 2020. And then we have the administrative principles for transfer pricing in 2021. And they are essentially the German short version of the OECD guidelines and really deal with the transfer pricing specific issues as listed below. From a bird's eye view, and I think I also mentioned this before, I perceive these as positive. They consolidate all the previous developments and certainly aim and facilitate an alignment with the OECD standard, which I, as a practitioner, think is very worthwhile. And so because in the next couple of minutes, I might find some more critical words for the administrative principles, but it's important really to emphasize that generally speaking, they are a step in a correct and right direction, including the more economics-driven view on the arm's length principle. Again, somebody who likes functional risk analysis or value chain analysis, as Theo also probably favors those. I mean, that is certainly a sensible step to take. And I, again, feel much more comfortable than in this OECD framework where you essentially have a substance over form sort of framework. And we are getting there. We are not quite maybe 100% there yet, but it's certainly getting there. And now I want to maybe mention some of the unique aspects remaining in our administrative principles that are not well known outside of Germany, but that merit to be addressed here. So first of all, we had a hierarchy of methods in Germany, with the CUP more or less being the preferred method, and not only in the written word, but also in practice, the TNMM and the profit split were viewed as it's almost second class kind of TP methods, right? So not very favorable looked upon. That has changed, I think, in practice, and for sure now the new administrative principles abolished this hierarchy. So it's sort of the best method approach now that you are familiar with as well.
Yeah.
With the addition, and that's again the speciality I mentioned, you have this hypothetical arm's length test, right? So this hypothetical bargaining situation type of issue. Again, if you're dealing with business restructurings or transfer of IP, then actually such a hypothetical arm's length test is at least mentioned and favored, and that is written here as sort of a default or preferred method. So that is something to keep in mind, because you don't find it in this explicitly in the OECD guidelines. So that is certainly unique. Benchmarking, I mean, every country is a bit different on how they treat benchmarking. I think here the changes were not favorable from the German administrative principle, because before 2021 they were rather flexible. So of course interquartile range was mentioned, but just as a sort of a last method of last resort. So you were not forced to apply interquartile range. You could kind of deal with comparability effects or lowering your range, narrowing your range in whatever statistical or even plausibility calculations that were appropriate. That was very flexible. Now the application of interquartile range is sort of a default approach, and you would have to provide arguments or defense if you want to apply anything else. So I know for a lot of countries that's not a big deal, because they also kind of favor very clearly the interquartile range, but I think it curtails your flexibility, especially when you think about target margin systems, right? So that is certainly I perceive this as a negative aspect. The next one is positive from a formalistic point of view. Oh, sorry, not the next slide. I was just referring to my bullet.
Go back.
The previous German principles had a classification of entities. That was, you always have to classify the entities. You perform your functional risk analysis, and based on the analysis, you have to classify your entities. Most people are familiar, of course, with a routine entity and also the entrepreneurial concept, because they are basically enshrined in the OECD guidelines. Now, the German principles, they had a very unique feature, and that was the so-called hybrid classification. So something in between, which, yeah, I mean, it's intuitive, right? That if you have only two categories, and the world is not just that simple, that two categories may suffice to adequately categorize every entity imaginable. So there's a hybrid classification in the middle. The most important implication of this hybrid classification was you cannot apply TNMM, which is a biggie of sorts if you consider that 70% of transfer pricing is based on TNMM. So that is or used to be a source of uncertainty for sure in Germany. So it's gone from a formal point of view, but I mean, I don't want to get philosophically here, but yeah, I would dare to say, if you are in Germany, the concept applied by auditors regarding the delineation of a tested party tends to be a bit different, opposed from the US or the Netherlands, where you think, okay, a tested party is a wide concept. German auditors, at least some of them, might have a comparatively narrow concept of the tested party, because in their mind, tested party is sort of synonymous with routine, which isn't true based on the OECD guidelines, right? It's just the tested party should be the least extensive functional profile of the two tested party, but it does not imply a routine classification. So that in Germany is still lingering in field audits. So that is also something to be aware.
And to add to it, I think that's when you look at the arm's length principle as a concept. There's one remark on it, that it doesn't deal sufficiently with synergies. Yeah. And that's maybe also what then the German auditor takes up, and want to have more result or less risk. And because that's in that synergy concept that the arm's length principle has difficulties to take away, to take away with it in the discussion. And then you get into all kinds of discussions on results and risks. And that's what's happening, I think, in Germany a lot. Still, and that's also what my experience is. And then you get in all kind of discussions where you have to prepare you up front, and don't be surprised when it hits you. And know what to do then. Okay.
Absolutely, yes.
Okay.
And I mean, then the last transaction to be mentioned in terms of what is unique is possibly the financial transaction where Germany. I mean, we have the new chapter 10, I think, in the OECD guidelines, right? I mean, it's a comprehensive chapter. I think it's, I mean, you can have mixed emotions about it, but in the end of the day, I think it's an okay framework, and you can work with it. And Germany kind of, despite having the OECD guidelines as an annex, felt the need to have its own say in the administrative principles, and it gives you a glimpse of the thinking going on with the Ministry of Finance and of course how they educate the auditors. They are very skeptical of clients or consultants applying those rating tools and applying standalone ratings and performing CAP analysis. Why? Again, this negative framework or climate of distrust. They're very much focused on, of course, inbound loans from the Netherlands, maybe, but also from Ireland, from Luxembourg. And they are, let's be very frank, they are kind of fed up with, or were fed up at least with interest rates of like 12 or 16% in some areas, which, I mean, you can have a discussion on this, but the reason why you might even have a solid CAP to defend it, but in Germany it's really tough to defend it, because they would not just challenge your CAP analysis, they would like the
leverage,
the comparability analysis, but they would actually challenge the application of the CAP and of the standalone rating itself. So implicit support is a big issue in Germany. And that is certainly something, when you have financial transactions, to kind of double check whether you covered all the bases there. Yes.
Yeah, I think it's a true statement, because since the new guidelines on the OECD, you see far more interested in financial transactions by tax authorities. And in Germany, I have a long list of experience that is highly difficult to get a good discussion, and often it starts with something that you don't almost not understand where it's coming from.
Yes.
So you have to really go into the debt equity, the leverage, and interest, the rates. So don't only have one benchmark for the interest rate, because then you will you can get in big troubles. That's what I'm saying. Okay.
Absolutely. That's true.
And sometimes they come up with a CAP that doesn't have any similarities with your position there, but you have to then have something to back your position up and to do more. Yeah.
And that's a good statement, because sometimes it just is if you have a transaction where you kind of have to defend higher interest rate, it's in Germany sometimes advisable to do a secondary analysis. Okay, you have your CAP, but let's kind of back it up.
No, that's it. I think that's important. Okay, and we have some cases together, so we know what to do there. Okay, maybe next slide. Okay.
Yeah. I mean, that's I think my last slide here, and I mentioned some of this, and maybe that's an opportunity to recap. So one of the things I emphasized was the transparency, right? And here, when you come to the burden of proof and the compliance burden, this is where it manifests, right? And just manifests in day-to-day practice. So this additional evidence that you have to provide, and the last words written here are meant like seriously, independent of the applied transfer pricing method. Again, you can have a very good outcome testing based on TNMM. That does not stop the auditor from asking you to provide this additional evidence for maybe price lists, or what were the resale margins you granted independent sales agents that you might have. So he might say, okay, yes, you have a you have a TNMN analysis. I don't care. I want to apply an internal CUP based on resale margins or commission rates. You grant independent sales agents performing similar functions. So there you go. And again, this burden of proof, you can not really withhold such information. So if a request for this is made, even if it's not contained in your documentation, even though you don't utilize such information for your own method, it can still be requested. So this is certainly something to watch out, and this is also meant by what I was writing here with the hence cooperation requirements. So German auditors are very keen on it. My favorite story on this is, and this is not like made up, right? So how far does this go, right? How much additional information can they request? And that is administrative guidelines number 13 and 14. It's perfect to read, because it says, okay, look, the auditor can also request your written communication in order to assess whether, for example, the facts you presented on the business relationship is consistent, right? So you might have a functional risk analysis portraying one entity as an entrepreneur, but are you really sure that the emails and such would contain, let's say, correspondence that would back this up? I'm not sure, and it's also very hard to kind of pinpoint. And auditors do actually request. I experienced this 2 times. It was not happening in either case, but they requested as a sort of a pressure point to say, okay, look, if I do not get additional information I'm asking, I'm making a formal request to be provided with all of your emails, full stop. Okay. That is the mindset of the auditors. I could name the names because they actually published that, so it's not confidential information, but I'm not going there. But I know these people, and they exist, and this is how they operate. And not all of them do, but it's not irrelevant, because actually such a request is backed up by the administrative principles. So it would be not, and I mean, for sure you could list like concerns about personal data, whatever, but I mean, if the request would be made, I would not be that confident that you could deny it in full.
Okay, Oliver, just for time's sake, I think we have to skip something, but I think that's on the slides, and everybody that's listening in will get it.
Sure.
I will make the comment, and the audit climate in Germany, but there's in more countries more and more questions, far more audits, and I think there will be even far more map cases, and maybe a bilateral APA would be an instrument to look into.
Okay, we addressed the differences. I mean, we really addressed them, so I don't think we skipped.
Only thing, outcome testing and price setting we mentioned, but I think we skip it for today. We mentioned a lot about it. I think we can go to the next slide, and it is so pity that there is really an IT problem in Germany, and that was what stuff in Schlaa. I think this slide says it all, but Stefan in Schlaa from the company, I think there's really someone to go to on those cases. He is a high level specialist on helping you when you are really in trouble in that field. I work a lot with him, and with ISP and this ISP Global Tax, they are together in Düsseldorf. So it's a pity, but I think he knows far more about those cases than I do, because in transfer pricing in the Netherlands, court cases are important, but not too important, because they're so specific. In Germany, they are more seen as a guidance where you have to look, can be for more cases, not only for the case at hand. So that's really important to understand it in Germany. Then I think we can round it up by the last slide. And this is really also the title of it. Now, if I would round it up, I would see a pity that we did try it with 4 people and we ended with 2, but I think we managed. You managed it very well, Oliver. I think what I would like to round it up is Germany is a country that's going into the OECD, but there are so a lot of things to think about on the organization of the country, with all those federal as a state. It has lender, it has local tax authorities, and they all have to agree on things. And in the end, the local people have to agree on the outcome for whatever. So this, to me, and next to it, the legal concept, but there's still a lot of going around. The hybrid concept. You have also things on Funktionsverlagerung und so weiter. Yes. I think that's all in the basket.
And don't forget about permanent establishment. That's the really fun stuff. It has, I think, 300 plus pages. So that is a fun read.
And that's in Germany a far more. In Europe, PEs are not so big, but in Germany they are. So if you go into Germany, then really be prepared for it, and don't go in with your OECD guidelines and with your general stuff. And I'm prepared. That's, I think, what I'm trying to convey here, that you really have to be prepared to go into and talk to people that are experienced in it. Otherwise, sometimes I got the head of tax calling me, very annoyed to the roof, because he thought he was prepared and he didn't understand what happened in the meeting. Yeah, and irritated. And if you are well prepared, your experience and my experience is that you can have a good debate in Germany and have a good outcome. That's like all the countries, maybe even better than in most countries, but you have to understand where you're going into. And that will be my roundup. Yeah. Okay.
I mean, that's a fair roundup, Theo. And I think what you mentioned is 100% true. I mean, transfer pricing, I would always say, in the end of the day, it's also about storytelling, right? You need to tell a convincing story to the auditor. It needs to be consistent and reflecting your case. Yeah. And from the German perspective, what you mentioned, or how to translate this, is your story needs to kind of maybe not be told just, from the result based, but you have to tell a process based story, right? Yeah. You have to tell the auditor, look, this were the thoughts going into this, and this is the result. But you cannot tell a story in Germany just saying, okay, this is the result, right? You have to kind of build the story a bit. You have to build the story up. That's maybe.
And to be honest, I do that each day also in the other countries, but in the Germany it is far more important. Okay, now, danke, thanks for the hour. I think the one thing on the roundup, I've forgotten something. A last comment. It seems that you have to have a survival guide when you go into Germany. Is that a true statement?
Absolutely, Theo. You have to have one, and it just so happens that I published one a month ago. So yes, there's a transfer pricing survival guide out there now. Yes, I mean, basically touching upon issues we discussed today: how to spot risk, how to identify it, how to mitigate it. Yeah, but just a small book.
And if they want to get it, then please give us the question, and we'll also send that around. Maybe next last slide. I think we will have a sequence of this kind of webinars. This is supplemental information. I don't know that your survival guide is on it, but we'll add it, by the way. And okay, and this is what because we are 10 years in existence, and the 1st of June will have the 10 year. Hey, that's good. And we will have the webinars like it with the US, South America, and China. So you are in a good company at Germany, I think, Oliver. And now, thanks also to Klaus Dorner and to Stefan in Schlaa. And I hope that we will have all fall together maybe next time. And thank you, and tschüss, und bis zum nächsten Mal.
My pleasure. Thanks for having me, Theo. And yeah, best